So apparently Cathie Wood just bought a ton of Tesla shares right before their earnings call. In fact, it says Cathie Wood buys $36 million worth of Tesla stock right before their earnings call. Now this was updated at 4:07 p.m. Eastern Time on the 17th of July, which is today, literally just about an hour ago as of me recording this. Now you might be wondering who Cathie Wood actually is. She's kind of like a celebrity finance content creator and business person. She's kind of someone that a lot of people have probably seen on YouTube or listened to in a podcast or something like that. And she's actually someone who created ARK Invest. And ARK Invest is actually a ETF that she created for basically her brand, and she manages it, and you can invest in ARK and get basically whatever returns that she's getting for you. Now, as you can see, over the past 5 years, not so great. All time up 274% if you invested way back in 2014. Obviously, you probably would have been better off just buying the S&P 500. But she had a huge spike right in here, right around COVID. She bought a lot of different stocks related to what was going on with COVID, a lot of at-home stocks, or what they called stay-at-home stocks, which had a major decline after COVID kind of went away. And so that explains why ARK Invest had this huge spike around the COVID timeline. She bought a bunch of things that she predicted accurately that would capitalize on what happened with COVID, but then, towards the end of 2021, started seeing a decline. In 2022, a major decline. So if you bought around the time of COVID, you were not very happy with your returns. So they've been building back up slowly over time, as you can see. But, over the past 5 years, still not that great. Actually, pretty mid if you look at the returns since around 2023, kind of post-COVID and all of that, after it kind of went back to where it was pre-COVID. So if you ever check Reddit, you will probably see people joking about, well, Cathie Wood bought this, so I'm going to do the exact opposite and sell, or something like that. But obviously, communities like Reddit, they make fun of all sorts of celebrities, so obviously take that with a grain of salt. Either way, if you kind of read on what she tends to do with ARK Innovation ETF, she typically goes heavy on growth, tech-focused holdings, which can be obviously high risk and high reward, as you can see by how the portfolio has done over the course of the last decade. So she just put $36 million into Tesla. Let's look and kind of evaluate. I'm going to kind of go through my process of evaluating this in this video, and you can kind of come to your own conclusions. Obviously, I'm not going to give you financial advice because I am not supposed to do that. So Tesla is actually down, even though she just bought a ton of stock. It might go up tomorrow based on this news, and we'll see how the Q2 earnings are going to be. There's a good chance they won't be that great. They are still kind of recovering from all of the political stuff that Elon was involved with, the fallout from the new bill, which is going to hurt Tesla's ability to get these EV incentives from the government, which seems to be done away with thanks to the big, beautiful bill or whatever it's called that just passed. This administration doesn't seem to be really big on EVs. They are more pro-oil and things like that. So, electric vehicle companies like Tesla may hurt for a while because of this. Another reason it may be very surprising that Cathie Wood made such a big investment, but she might think she's buying low before a big spike. So if you look at year to date, Tesla has been struggling pretty much ever since Elon Musk started campaigning with Trump for the presidential race in the US. Tesla has been seeing a lot of problems, but over the past year, they are still technically up 28.54%. If you compare that to how the S&P 500 has done over the past year, still beating the S&P 500 as a matter of fact, and over the past 5 years, still solid growth, up 219% over the past 5 years for S&P 500. You're talking about half of that at 95%. Obviously, past results do not equal future results. Now, if you look at the last quarter for Tesla. Let's look at the last 3 months. They are actually up 31% in the last 3 months. Now, obviously, still not good for the year, but an encouraging sign nonetheless. So there may be some signs of hope for Tesla, although they are having a lot of difficulties. Now, how Tesla mainly makes money, most people know about the vehicles, but they also merged Tesla with Solar City, which used to be a separate company that Elon Musk created for basically home electrical or home solar systems. If you're talking about like the solar roof, which I haven't heard much about in a while, and which is basically makes your whole roof generate electricity without having to have separate panels. It looks really cool, but it was kind of expensive at the time. And then they also had the power bank that basically stored energy that was created from your Tesla roof. Again, they took that from Solar City, combined that with Tesla. So Tesla does electric vehicles as well as solar technology. And they are also working on basically humanoid robots now as well. So they are kind of more of a technology company than just a car manufacturer. And they are also now working on full self-driving software and robo-taxis, as well as AI development. Now, if you're talking about the future of transportation, you may have heard me cover this before, talking about Uber as well as Google with Waymo. Self-driving and robo-taxis, that's kind of the future of transportation. A lot of people see that. I remember seeing a podcast with Elon, I believe it was on the Joe Rogan Experience, a long time ago, where Elon, before everybody started hating him for all the political stuff, Elon had this interview and he was talking about how a lot of people won't need a personal vehicle anymore in the future because we will have basically full self-driving taxi services 24/7, and it'll take you pretty much anywhere you want to go. So it'll be like using Uber, but you don't have to tip. You may not have to pay as much, I'm not sure, but then you will have to be able to obviously sell the public on, is this safe? And you will have to meet regulations, which they are working on right now, but also, is it going to be cheaper than owning your own personal vehicle? So that's kind of the next wave of transportation. Tesla is, from what I hear, mostly in second place behind Waymo, which is owned by Google, but they are probably one of the top two in that race right now, and so there is some potential with robo-taxis. This could lead to a major breakthrough for Tesla stock if they were to make enough advancements and kind of turn things around after this rough year. Now, if we look at the year-over-year quarterly financials, they look really bad for the most part. Again, you can have a rough year and still have a solid stock. It doesn't mean just year-over-year quarterly financials are the end-all be-all. They do have a Q2 2025 scheduled for July 23rd of this year, so we're talking just about a week away from their earnings call. If you're interested in buying or selling Tesla before then, a lot of people like to make a move right before the earnings call, like Cathie Wood just did. PE ratio is really high at 175.8, which again, it's for tech companies, a lot of times you get major growth and they will have higher PE ratios. Like if you look at NVIDIA, you don't care what NVIDIA's PE ratio is because you're getting ridiculous amounts of growth in the stock. So there's no way you would want to sell it. But with them, it's like, well, is it worth the 175.8 PE ratio compared to what you are getting back or what you anticipate you're going to get back? Obviously, that's up to each individual person. To me, they aren't really returning enough right now to justify that, but their last quarter could show some signs of improvement, but they were on a steady decline most of the year up until the last few months. So you kind of take the last quarter with a grain of salt because of that. And they also have a lot of challenges going on right now. So a lot of their problems can be summarized here by AI. It would take me forever to go and search for an individual article to describe every single one of their problems that they've been having. And I'd probably miss one or two of them off the top of my head. Now, they do seem to have declining sales. They especially had a really hard time getting sales in Europe. There were some things said in certain conventions and in certain moments on TV. I'm not going to get into that politically. This is not a political channel, but those hurt sales in Europe. People were burning Teslas. People were attacking Tesla dealerships. It was not good. So decreasing sales a big problem. Also, increased competition, which they talk about from, there's one in China specifically that's really gaining a piece of their market share for EVs. Market saturation as well. The market is becoming more saturated. More and more companies are creating EVs. And Elon even said in the beginning, he doesn't even necessarily want to have the only top EV company. He wants to encourage other companies to create EVs to help with the climate. Now, is he still big on the climate stuff after some of the things he said politically? Who knows? But in the past, that was one of his motivations, was to start the trend for other manufacturers to create EVs, and there you go. He succeeded at least in that area, although Tesla may be losing market share. So the political activities, public statements really hurt Tesla's brand. Customer loyalty, it seems to be declining because of the political stuff. Now you kind of divide loyalty when you go and do something that's kind of controversial politically. Chip shortages have been a problem that may improve with some of the recent announcements, but we're still kind of waiting to see a lot of how some of these tariffs play out. Raw material costs, supply chain vulnerabilities, high employee turnover. We're going to get more into that here in a second. Autonomy development. They've had some issues. They've had like even recordings of Teslas violating rules of the road when being in self-driving mode, whereas you have to be obviously very careful with that, and a lot of people think Waymo is kind of beating them in that area. Product line stagnation. They're also having a decline in revenue, profitability, pricing pressure. They have a lot of different issues right now, and they have a few just like individual issues in possibly different states like California and some other things that have been issues as well. And Elon Musk has had his own problems trying to manage all these different projects he's doing at the same time. Now, another thing to point out, even though their returns, if you look kind of longer term, their returns have been pretty solid still for the most part. And that's what Cathie Wood's betting on, is that it's going to turn around, which seems risky. But if you look at their dividend yield, though, you are investing in Tesla strictly for growth. If they are having all of these current issues that I just went over, you may be a little bit concerned about future growth. And if you're not getting future growth, you're not getting a dividend return. So it's not one of the, dividends usually keep things more stable. It encourages people to hold. And it sacrifices a little growth to do that, but it can make its stock more stable. They are not doing that. They are all in on just growth, and there are a lot of concerns right now, even though they do have some great ideas. Now, if you look at their balance sheet, assets versus liabilities, not too bad. They have more than a 2-to-1 ratio of assets to liabilities, and seems to be improving. But if you look at their price to book, it's pretty high, 13.88. Now, it can be high, especially for tech companies as well, but it's just one of those things where it is something you factor in, although there are many factors you have to look at. Because you don't obviously want to overpay for a stock, even if you think the stock is good. So if you look at Tesla's forward PEG ratio, according to NASDAQ.com, they have it at a 9.83. which is also very high. Normally you would look at something and you would want it to be closer to like 1 or 2, and you're looking at a 9.83. That's by far one of the highest ones I've seen this year, just looking at all sorts of different stocks. And so if you look at the PE ratio, the forward PEG ratio, you look at some other indicators like that, the price to book as well, there are a lot of indications that this is overvalued and not undervalued. So it's pretty risky in my opinion based on a lot of these numbers. Now, if you look at what hedge funds are doing, if you look at, say, Q1 2025, 83% were selling, 17% were a buy. So you had 2.55 million shares sold and 500,000 shares were bought for Q1 2025. Now, obviously, we don't have Q2 yet. We will have that hopefully pretty soon. But that's what, hedge funds, that's what they do. They are supposed to get really good returns. They're supposed to beat the S&P 500. And so they have to know their stuff. And the consensus among hedge funds right now, or at least in the first quarter, was to sell. And they were doing that in Q4 as well. Now, if you look at insiders, the thing about insiders is a lot of times you have a very small sample size. So again, another thing you might take with a grain of salt, but just kind of an interesting thing to look at. In July, you do have an insider buying 90,000 shares. And then in June 2025, last month, it was pretty split. Now, if you look at analyst consensus ratings here, another thing I like to look at, you have a bigger sample size usually with this. You have a lot of different analysts that know their stuff. Now, 44% of them, actually just under 44%, give them a buy score. So in general, less than half of them say Tesla is a good buy right now. 36.4% say it's a hold. And there are 55 professional stock analysts saying this. It's not just one or two people. So already kind of concerning how close they are between buying and holding, but also 20% say to sell. That's a very high score for this analyst rating graph here. Usually, if I look at a stock and it's doing well, or there's some major news where a major, hedge fund manager or somebody is buying a stock, usually they have a really low or a 0 on the sell score. They have a 20% sell score right now. So people are not really sure what to make of Tesla, is basically what it's telling me from other analysts. Now, if you look at earnings, they are kind of all over the place as well. They've only beat earnings once over the past handful of quarters, and that was in Q3 of 2024. They've missed on earnings every single time the other 5 quarters. We don't know about Q2 yet, but it's not looking great. But again, that's just one small indicator, of course, among many. Now, if you look at how well run the organization is, you can read the news all you want about Elon Musk and him being in charge of Tesla, whether you think that's a good or bad idea. Some people think he's a genius. Some people think he's crazy. But one of the best ways, I think, to find out whether or not someone actually runs a good company is to look at what employees are saying. What is the consensus among your employees? So they're going to know things better than anyone else about the inner workings of your company. So 3.5 out of 5 stars. It's not terrible. It's a pretty average score, I would say, for a company. As you can see, a pretty average industry score, although it's a pretty wide range for an average score. But if you look at how many of them recommend working here to a friend, let's disregard the star rating. Only about half of them recommend working at this company. We read earlier, according to AI, they have a really high turnover, which is not a good thing. And then you look at Elon Musk approval rating as the CEO. Only about half of them approve of him as the CEO, people that he actually employs at his company. So not only are the analysts split on Tesla stock, but the employees are split on whether or not it's even a well-run organization. So just because a kind of celebrity finance guru or expert or whatever you want to call Cathie Wood, she's done really well for herself. Don't disregard that. But that doesn't mean every single trade she's going to have is going to be a home run. Even Warren Buffett has probably had his fair share of misses as well. But not to compare the two. I'm not saying they're in the same ballpark, by the way. But just because, like I said, a financial celebrity like Cathie Wood buys $36 million of Tesla stock right before their next earnings call doesn't mean there are not a lot of red flags about whether or not everybody else should do that. Obviously not financial advice. I currently have them, when I factor everything in, I have them as a hold. I'm not ready to call them a sell just yet. If I look at all the indicators that I just went over here, I can't quite give them a sales score yet, but I gotta say they are pretty close, in my opinion, to that if they don't turn things around soon, if they don't prove, like, for instance, that their autonomous robo-taxi service is going to be able to compete with Waymo, who partnered with Uber. That's going to be a huge part of the future as well, because they have more and more competition in EVs, and Elon Musk is doing a million different businesses at the same time. Solar, I don't even know if they're really one of the leaders in solar. They are just one of many, many different solar companies. The biggest potential I see is the robo-taxi service, because that could upend the whole transportation industry for each individual person. Right now I have them as a hold for my specific trading strategy. This is not financial advice, but I hope you found this helpful.